What's going on, guys? I hope you guys are enjoying the series so far and learning a thing or two from it. Now, today, what we need to talk about is something that I know is messing with a lot of you, and honestly, it did mess with me as well at the beginning of my journey. And then, before I figured it out, how to go about it, how to deal with it. Now, what I'm talking about is actually accepting losses, how to handle them, how to think about them, the way most of you are looking at them, from teaching so many of you, from interacting with a lot of traders. There's sort of like a wrong way of approaching it, right? The sort of way that most of you guys actually approach, which is it's a bit wrong, okay? And now look, I get it. You take a loss and immediately you're sitting there for like, I don't know, 10-20 minutes trying to figure out what the hell went wrong, right? You're checking the charts, you're looking at every single level, you're rewinding, you're asking yourself like, how did this fail? And I'm going to tell you right now, that is the exact thing that's keeping you from being profitable. So let me ask you something, right? If I told you that your strategy wins, let's say 70% of the time, right? What does that actually mean? Like, I really want you to think for a second, if your strategy is winning 70% of the time, what that means. From my understanding, right, it means that 70% of the time, when you take an A+ setup, and I mean a perfect setup, everything's there, right? All your boxes are checked, it's going to win, all right? But 30% of the time, it's gonna fail. And here's the part that people don't get. 100% of the time, it was still an A+ setup, right? And it's funny because I saw a comment the other day, right, that literally I was like, that kind of mentality, and it sort of fried my brain, not gonna lie. Someone said, right, that if it was really an A+ setup, it would have played out, right? A+ setups don't fail. And I was there sitting like what? That's not how probability works, right? That's not how any of this works. See, here's the thing, all right? Trading is completely a game of probability. We know that, right? It's not about being right every single time. It's about the odds being in our favor over time, right? And I know that my model, I've proven it, back tested it, traded it for so long. I know it works long term. I know it's profitable, period, right? So when I take a loss, my only job is to remind myself that this loss is contributing to a winning statistic. And that doesn't mean I did something wrong. But here's what, people get a bit confused. Not all losses, are the same. If you followed your rules, you stuck to your model, you checked all the boxes, and then the trade failed, that's a winning day. That loss contributes to your 70%, okay? Now, if you, let's say, took a loss because you over leveraged, or because you revenge traded, because you entered early, or because you tried to experiment with some model, that's not even yours. That is a completely different story, right? That's a loss you need to journal. That's a loss you need to analyze, because that's psychological. That's you breaking the system. All right, here's another one that might click for you. Now, I want you to take this analogy and just think of it as I'm talking about trading, okay? Think of it like, let's say, a recipe for chocolate chip cookies, okay? Now, the recipe says that if you bake the cookies at 350 degrees for exactly 12 minutes, you'll get perfectly soft, chewy cookies, right? 80% of the time. Now, that's your edge. That's your system. Now, as long as you follow that recipe, 350 degrees, 12 minutes, the right ingredients, you should get those perfect cookies about 8 out of 10 times. Sometimes they'll, still come out a bit off because ingredients vary slightly, right? Whatever. But the probabilities, they work in your favors. But then you start thinking, I'm impatient. I'm gonna crank it up to 400 degrees and do 8 minutes instead. or I'm gonna leave them in for 15 minutes because I like them a little crispier. Well, guess what? Now you're not working with that 80% success rate, right? You change the temperature, you change the time, you're not following the recipe anymore, and then you're still wondering why your cookies keep coming out burnt or undercooked, right? The recipe didn't stop working. The probabilities didn't change. You broke the system by not following it. You introduced your own variables, your impatience, your preferences, or your I think I know better. That's the psychological part, right? The recipe is fine. You just gotta trust it and stick to it, even when it feels weird to take them out at exactly 12 minutes. This is exactly like the same thing with trading. Okay, I know my model works best during the first 2 hours of London and New York session. And when there's a good volatility, when the market isn't choppy, when I'm entering off reading the higher time frame, reading it all the way down to the lower time frame, when I'm combining it with liquidity and inducements, when I have all these factors, then the lower time frame confirmation, then the time window being correct, that's when the probability rises, right? So if I try to take a pre-market trade, let's say at 7 o'clock, an hour before New York AM starts, right? Even though it's my setup, it doesn't tend to play out as much. And I can't just decide to change something to meet my needs, right? When that's not what's been studied, when that's not the system, right? So you need to trade the system. You need to trust the system. And whenever you try to break it, loosen your rules, do things however you feel just because you think you're above the markets, that's when you get humbled. Actually, you know what? Let me give you another way to think about this, right? And this is coming from personal experience as well, right? My family owns a coffee shop, so I'm gonna use that analogy to help you understand. Now, think of it this way: that I know from my data that every day about 70% of the people who walk in actually buy something, okay, and the other 30% they just browse and maybe leave without any purchase, right? Now, would you expect me to stand at the door analyzing every single who walks out of my coffee shop without buying? Would you expect me to chase them down and go like, wait, what did I do wrong? Like, was the lighting off? Should I have played a different music? No, I'm not gonna do that, right? That would be completely insane. I would just accept that not everyone buys, right? And that's the statistics. That's how it works. And here is what I would do, right? I would make sure that I'm doing everything right on my end, right? I would make sure that the coffee's good, it's a clean cafe, there's a friendly service, it's open during the right hours, and then I control what I can control. And as long as I'm doing that, I know that 70% conversion rate is going to play out over time, right? And trading is exactly the same thing. You can't control which individual trade wins or loses, but you can control whether you followed your system. And if you did, that's a win, right? Regardless of the outcome. So most of you would run that coffee shop perfectly, but when it comes to trading, you're out here questioning every customer that walks out. You're changing your menu every day based on one person's opinion. You're opening at random times hoping to catch different crowds. That's where you stop, right? Just run the damn shop the same way every single day and let the statistics do their thing. Now, I got to a point with trading where I literally wouldn't check my P&L for a bit of time, right? I would just trade, let's say for a week or two, do my thing, take my trades, and then just chill. Then I check my accounts after a week or a couple of days and be like, holy shit, I'm up like 5%, I'm up 10% on each of these accounts, right? And I was so incredibly consistent because I wasn't even focused on the money, right? I would just do my thing, check, a couple of days, a week later, and most of my accounts would be eligible for payout, right? And here's the thing, even if one account was literally one trade away from a payout, I wouldn't force it. I wouldn't try to catch a quick trade to get it there. Now, I would just keep trading it normally for another whatever days it takes, to get to that stage where I can ask for a payout. Now, when I started treating trading not like, it was a job, but like it was a task that I had to do in the morning. That is when everything started piecing together, right? That's when I found peace with it. That's when I could actually capitalize on the time freedom. And look, I know that some of you are thinking that, but trading is fun when there's adrenaline, when there's risk. Yeah, but that's also the problem. Because when trading is fun, it's really when you're just gambling, right? When you're taking risk and relying on luck. When you're breaking your rules and you're excited to see if it's going to result in a win, that's when it feels fun, okay? That's when the adrenaline kicks in and it's not sustainable. You can have fun. You can do things that makes you happy, right? But as far as the trade goes, I'm letting it do its thing. I'm not changing anything. I'm not letting my emotions, override my logic. And being systematic is being robotic. And being robotic is boring. And it's the only way. You should get to a point where you can say that trading is boring. That's when you have, unlocked some new levels. You're actually probably consistent by that point, and it at the end of the day just becomes like a job. You just gotta trade your hours and be done, and then go about your day. Okay, so here is what I need you to do. Right, before you enter any trade, ask yourself this one question: if I lost this trade, would I be mad at myself? And the question answers everything. It answers all the technical stuff. Did I check my boxes? Is there something obvious I'm missing? Am I trading at the right time? It answers all the psychological stuff as well, right? Am I in the right headspace? Did I just wake up 2 minutes ago and, without actually waking up properly, I've hopped onto the charts and, starting to find a trade? Or can I afford to risk this right now? Because if you can sit there, right, and be like, yeah, I don't think I'd be mad at myself if this failed, then this is a good trade, okay? Then take it. Take it every damn time. And if it fails, it doesn't matter. Now, don't sit there and dread about it. Don't try to decipher what could have possibly gone wrong when it's the same setup you've taken 100 times before. Right? So stop trying to find something wrong with every loss you take. And I promise you, most of the time you're probably doing something right. You just want to, convince yourself that you must have done something wrong. You are never going to win 100% of the time. Not every setup is going to be perfect. If it is good, take it. If it is bad, don't. That's it. That's how you become a better trader. That's how you, become consistent. That's how you become confident. And that's ultimately how you achieve profitability. You need to trust the probability. You need to trust the statistics behind your strategy. You need to acknowledge that you're human, right? And you're going to make mistakes. And when you do, your only job is not to double down on them. Accept it, right? It is bound to happen. And then you just move on. Okay? I hope this episode, this video has helped you, right? And that's it for this one. If it did help you, let me know in the comments. Actually, you know what? What I want you to do is drop your worst crash out day in trading in the comments, right? Let's hear about it. Because trust me, we've all been through the same shit with trading, all right? Now, hit the like button, subscribe if you haven't already, and I will see you tomorrow.